Quality Power now joining in on the show. And we've got Mr. B. Pandyan, the joint MD, joining in to talk about how their quarterly performance has been. Mr. Pandyan, great to have you today on ET Now. Thank you so much for your time. Just firstly wanted to understand, looking at your performance and what you had to entail in your conference call, you are guiding for around a 20% revenue growth in FY27. What gives you this kind of confidence, and what will, drive this targeted number in FY28?
Good morning, ma'am. Thanks for having me this morning. I believe we have a lot of good set of businesses. That is the coil products, which is HVDC and FACTS. We have two HVDCs coming up this year. The Olpad one, which has already been awarded, and Barmer, which is coming up. I think the technical bids are closed. On the instrument transformer front, I think 1 in every 2 instrument transformer that is being sold in this country at the high voltage transmission level is ours. So is our BESS factory. The PCS factory has picked up almost a gigawatt of orders on the PCS in the last quarter. From an order book perspective, we are about 1,940 crores this quarter. That is our unbilled order book, which is almost 6 times the revenue in 2025, or 2 times the revenue of last year. So that gives us the kind of a confidence to guide numbers both for this year and the year forward.
Mr. Pandyan, hi, morning. Sajid here. Give us a sense of the kind of HVDC orders that you expect, because you said one of the tenders closed. What kind of outlook you have for that particular segment?
So on the HVDC segment, we just acquired, or we are on the process of acquiring WS Insulators India, which is one of the largest insulator manufacturers in this part of the world. This gives us a TAM of another 200 to 400 crores in the HVDC space. At this moment, we are looking at least about 300-400 crores being contributed from the products that we have from the HVDC segment in the next 12 months. That is what we are gunning for.
And if I look at your data center business, that's also growing fast. What would be the contribution and the growth rate for that business?
The data center is, again, a very large volume of fast delivery kind of a business, especially for the hyperscalers in the US. We are also seeing traction coming out of the Indian markets. We picked up a small order out of Amazon in India. We are negotiating with other hyperscalers in India who are putting up facility. Most of these data centers, 1 gigawatt and above, is much larger than steel factories. So the transmission infrastructure being built is quite large. With the US bids alone, we are in excess of $150 million this quarter. It depends on how the capacity comes up in the next 2 quarters. I believe we will be guiding better on those orders.
So I want to talk about, in specific, the Sangli facility as well, because that's where a peak revenue potential of 1,500 to 1,800 crore rupees is what you've outlined. How quickly can this facility ramp up, and what revenue contribution are you targeting then coming in from FY27 and 28?
So this quarter, we are expecting it to be muted, primarily because we are already started shifting equipments into the facility. We've just had our inauguration function there. We are awaiting regulatory approvals before we start the manufacturing out there. We believe we have about 6 months of approvals from different clients. Are expecting about 60 audits from global customers in the facility. So we have given a guidance of about 20% and about 50% next year. That's the kind of ramp up we see coming in. With the kind of tender pipeline that we have, I think about 3.5 years is what we are looking at to be able to establish full utilization.
Right. And what about NDOX? Because that facility as well has a peak potential, as we understand, of about $70 to $80 million, while the current pipeline is about $60 million. How much of this pipeline is already contracted, and by when can the BESS become a meaningful contribution to the group revenue?
I think by Q3, Q4, we start invoicing the $60 million of orders. We are targeting in excess of 1 to 2 gigawatt of orders going forward at least at this moment. We are also looking at bringing PCS to India in the next few years. We have already had the traction. The price levels are supporting us to enter India. We have 3 large facilities coming in, one in Sangli, the expansion in Delhi, and also in Vizag, the new WS factory. So because of the management bandwidth, we are going slow on the PCS, but I believe end of next year, we should bring the BESS into India.
I also want to talk about WSIL. You expect the margins to reach about 15 to 25% within 4 quarters. Tell me, A, the levers in place behind this margin expansion, the capacity utilization, what kind of product mix, pricing, or operational synergies would actually contribute to that. And with this acquisition now, your US expansion and the multiple capacity addition that you plan to raise about 500 crore rupees, how is it that you intend to balance growth investments with debt and shareholder returns?
So we technically do not believe in debt. We are almost a debt-free company. That is something that we don't leverage our balance sheet, especially on debt. We are generating a lot of free cash. The PAT has been quite encouraging for us to invest in new businesses. I believe the tailwind in the sector, especially on the transmission, is there for at least 5 to 7 years, which means capacities need to come in case we need to, tag on to tailwinds that is coming our way. The WS Insulators is a SEZ-based facility where most of the focus is on the global markets. We are investing in the US markets. We are already shipping 765 kV insulators to the US market. We've already picked up orders from Power Grid and other utilities in India for the insulators. We are also bidding for the HVDC opportunities in India for the insulators. So I believe there's a good amount of demand. We are negotiating capacity reservations with large EPCs and large global multinationals in this space. We should be completing the acquisition in the next 1 or 2 quarters, and that is when it's a lockbox acquisition. So we would anticipate that the revenue starts hitting us in the Q4 this year.
Mr. Pandyan, give us a sense of the kind of capex that you have lined up over the next 3 to 5 years, because the kind of transmission orders which are expected, the kind of doubling of renewables, coming up of data centers in India, there's a long tailwind which is coming for the sector and for companies like you. What is the kind of capex that you have to line up, and what kind of capacity addition that you will do as part of that capex?
So most of the facilities in the coil products business, I think we are good for about 3 to 4 years. So we don't see capex coming there. On the PCS front, again, we have factories which are ready to take on the product line. That is not a worry. Instrument transformers, we would, I believe, be at the end of the factory capacity by end of next year, even with the current capex. So we are already in the works of putting across a facility in Turkey for high voltage instrument transformers going forward to the European and the Middle Eastern market. We also see some capex coming as a part of our insulators facility, where we are getting largely into polymer high voltage insulators and capacity enhancement for the American market. That's where we see capex, but all these are much smaller numbers compared to the profits that is expected to be generated in the next few years.
Okay, Mr. Pandyan, it was a pleasure talking to you and getting that perspective. So the company is holding on to the guidance of 20% revenue growth in FY27.